Yes, so we are discussing section 143, which is regarding the rights and duties of the company auditor. What are the rights of the company auditor? Right to access books of account, right to obtain the information and explanation, right to report to the members, right to receive the notice and attend the general meeting, and also the right to exercise the audit lien. And after discussing the rights of the company auditor, we came to the duties of the company auditor. How many duties of the company auditor are we discussing over here? 8 duties. First duty, duty as to inquiry, then duty as to reporting, then duty as to reporting on the additional matters, then duty to sign the audit report, then duty to give the reasons for the explanations for the qualifications in the audit report, then duty as to the branch audit, then duty to comply with the auditing standards, and duty to report the fraud to the central government. Right. So we were discussing the first 2 duties of the auditor. What are the first 2 duties of the auditor? Duty as to inquiry and duty as to reporting. 143.1 and 143.3. Right. 143.1, you make an inquiry. If you don't have any finding, then no reporting is required to be done. But if there is an adverse finding, only in that case the reporting is required to be done. But for 143.3, whether there is a finding or there is no finding, always the reporting is required to be done. Right. And what are the 6 points of inquiry under 143.1? A for advances, whether the loans and advances made by the company, are they properly secured, and the terms and conditions thereof, are they prejudicial to the interest of the company or its members. Then B, whether transactions represented merely by the book entries, are they prejudicial to the interest of the company or its members. So by default, is an auditor required to look into the propriety of business conduct? No. But wherever company law specifically tells us to look into the matters of the propriety, there we look into the propriety of the business conduct. Okay. Then what does C stand for? Company, where the company is not an investment or a banking company, whether the shares, securities, debentures have been sold at a price less than the price at which they were purchased by the company. That means you're selling your investments at a loss. Then 143.1C, D, the whether D for deposits, whether any loans and advances have been shown as the deposits. Then E, whether any personal expenses have been charged to the revenue account. And last one is the F, which stands for the fake shares. What does it say? Where shares have been issued for cash, whether cash is actually received, and if shares have been issued for consideration other than cash, then in that case, whether the position shown in the balance sheet, is it correct? Is it regular and it is not misleading? Okay. And then after that we saw the 10 points of reporting under 143.3. What are the 10 points of reporting? Right, information proper, branch books, AS adverse, directors maintenance, IFC and the others. Right, so whether the auditor has sought and whether he has obtained all the information and explanation, then whether proper books of account as required by the law have been kept, and proper returns adequate for the purpose of the audit for branches not visited by the auditor. Then whether the branch auditor's report have they been forwarded to the company auditor, whether the balance sheet, profit and loss account, are they in agreement with the books of account. You remember that balance sheet, schedule, trial balance, ledger, books of prime entry. Right? So whether balance sheet and profit and loss account, are they in agreement with the books of account. Then whether the financial statements comply with the accounting standards. Then any observations or comments which have an adverse effect on the functioning of the entity, of the company. So I told you going concern. Right? Whenever there is any concern regarding the going concern, whether any directors of the company are disqualified under 164.2. Then any qualification, adverse remarks regarding the maintenance of accounts. Then whether the company is having the adequate internal financial controls and also the operating effectiveness of such controls. However, for which companies IFC reporting is not to be done by statutory auditor, in case of the private company, which is a one-person company or a small company, or a private company having turnover of less than 50 crore and the borrowings of less than 25 crore. It says IFC reporting. IFC is what? Internal financial control. Reporting is not required to be done by the statutory auditor. And then J is what? Such other matters as may be prescribed. And under the such other matters as may be prescribed. So under 143(3)J, what do we have over there? A, B, C, D. Then under E we have the E1, E2 and the E3. And then you have the E, F and the G. Right? What is A over there? Whether the company has disclosed the impact of the pending litigations. Right? Then whether the company has made the provision for the material foreseeable losses. Then what does it say? Whether there has been any delay in transferring amount to the Investor Education and Protection Fund. Right? Then D has been omitted. It was regarding the disclosure of the specified banknotes at the time of the demonetization. Right? Then whether F, whether dividend paid or declared, whether it is in compliance with the provisions of section 123 of the Companies Act 2013, and whether the accounting software of the company has an audit trail feature. So auditor, what you need to do? You need to do the reporting. What reporting you need to do? That whatever is the accounting software which is there in the company, like say Tally or SAP or any other, what does it say? Whether it has an audit trail feature. What is an audit trail? When you say a trail, what do you mean by trail? Tracing of a transaction. So any accounting entry which has been passed in the books of account. Now see, in the automated environment, what happens? The accounting entries are passed automatically. Right? The input of the data is done, processing is done into the computer system, and you directly get to see the output. But auditor cannot do the audit unless and until he gets to see the supporting documents. So that is why to facilitate the conduct of the audit, it says the accounting software should have an audit trail feature. Right? So that the auditor can trace the transaction, because audit is a post-mortem activity. You understand? No, already the accounting is done. Already the books of account for the year have been closed. And I say 1st April 2025 to 31st March 2026. And then auditor goes in April 26 to do the audit. Right, for the 365 days, whatever year has been completed. Right, so now how he can do the checking? If he gets the evidence, if he is able to get the tracing of the transaction. So it says the accounting software which is there in the company, inbuilt in the accounting software, there should be an audit trail feature, and this audit trail feature should have operated throughout the year, like something like maintenance. You remember today I talked about design, implementation, maintenance, right? So if 10,000 accounting entries have been passed, the audit trail feature should have worked for all the 10,000 accounting entries. That is, it should have operated throughout the year. Then once the audit trail has been prepared, nobody should be allowed to make the unauthorized changes to it. So it should not be tampered with. That after the entry is passed, then somebody is going and making the change in the records over there. Tampering is what? Making unauthorized changes. So there should be no tampering, and it should be preserved as per the statutory requirements for the record retention. Today when we were studying section 128, what did we say? For how long does a company need to maintain the books of account? 8 years. So even this audit trail which is there in your accounting software, for how many years you need to preserve it? You need to preserve it for the 8 years. Right? So auditor of the company, you need to report. Are you understanding what are we discussing? 143(3), duty as to reporting. So auditor of the company, you need to report. What you need to report? That whether the company's accounting software has an audit trail feature, and which is OTP, operated throughout the year, not tampered with, and it has been preserved as per the statutory requirements for the record retention. Is that clear to everyone? Okay, right. So here we also have the definition of the audit trail. What does it say? Audit trail means a step-by-step sequential record which provides evidence of the documented history of the financial transaction to its source. Right? So you're able to identify the source of the transaction, on what basis an accounting entry has been passed in the books of account. An auditor can trace every step of the financial data of a particular transaction, right from the general ledger to its source document, with the help of the audit trail. Right? Say if you see, you've seen snail. Right? They say, you might have studied it in school days or something, no? When the snail is going over a window, right, it leaves a slimy substance behind. And then from that slimy substance, you come to know, okay, this is how the snail has traveled over here, right? So you're able to trace it. Similarly, over here, you should be able to trace that how this accounting transaction has been passed in the books of account. Like if you go to a, what do you say, some what do you say, national park or something, and they take you in the jeep for a safari over there, for a jungle safari and so, and they said, oh, yours is bad luck, you know, the people who had come before you, they got to see 5 lions over there, and they got to see so many giraffe and all, and then they will show you something like, you know, see pug marks of cheetah, pug marks of leopard. No, who knows what are their pug marks? You understand? No, but they will show you, you know, the jeep fellow. So anyways, on what basis they are saying that the lion went from here or the cheetah went from here? On the basis of the pug mark, right? So that is how you are able to trace it. Are you understanding that? Right? So this is the audit trail. Trail of what? Of the accounting transactions which have been recorded in the books of account. What does it say? Right from the general ledger to the source document with the help of the audit trail. Okay, right. And now what we are left with is the E1, E2 and the E3. Right? E1, E2 and the E3. Okay, do you remember what we are doing under 143.3? We have to, what is 143.3? We have to report on these points. And now J is what? Such other matters as may be prescribed. And under that now we are seeing the E1, E2 and the E3. Right. So now what the company has done is company, let's say Company Growth Limited, what they have done, they have given certain funds to an intermediary. That intermediary could be in India or it could be outside India. Right? So what has happened? The company has given the funds to the intermediary, say some subsidiary or some foreign investor or somebody, and then they are telling this intermediary that our promoters of the company, like these promoters are called as the ultimate beneficiaries of the company. It says if the promoters of the company want any loan, or if they've taken any loan and any guarantee of their loan is to be given, or any security to their loan is to be provided. So intermediary, you provide it on behalf of the ultimate beneficiaries, right? So rather than company directly giving a guarantee on behalf of a promoter, what is company doing? Giving the funds to the intermediary, and then intermediary is using it for the benefit of the ultimate beneficiaries of the companies. Okay, now is this allowed? Can a company give a fund to intermediary to use it for the ultimate beneficiaries of the company? Yes, it would be allowed. Like you can enter into related party transactions, and this is a related party transaction. So is it disclosed? But you have to give a disclosure in the notes to account. Why? Because it is not a, what do you say, a non-related party. It is a related party transaction. So if it has been disclosed in the notes to account, then no problem. And if you have, the company has given say 100 crore to the intermediary, and this 100 crore has been used for the ultimate beneficiaries, and this has been disclosed in the notes to account, then no problem. But what has happened other than as disclosed in the notes to account? So that means it is not being disclosed in the notes to accounts whether any funds have been advanced. And so what does it say? Auditor, you need to report that no funds have been advanced. Yes, other than as disclosed in the notes to account. What should happen? There should be no funds which should be advanced by the company to the intermediary, with an understanding, whether recorded in writing or otherwise, that they will be used for the benefit of the ultimate beneficiaries of the company. Now I am doing the audit of the company, okay, and now I want to check that no such funds have been given by the company to the intermediary, with an understanding, whether recorded in writing or otherwise, that they will use it for the benefit of the ultimate beneficiaries of the company. How, as an auditor, I will come to know? Right, so one of the method over here is that auditor, you take a representation from the management. You take a representation, take it in writing from the management. Tell management a written representation. Later on, we'll also study an auditing standard, SA 580. SA, you know, SA, Standard on Auditing 580, which is regarding the written representation. Like, let me give you one more example, right? We are doing the audit of the financial statements. I, as an auditor, will be doing the audit of the balance sheet, P&L, cash flow statement. But whose responsibility to prepare these financial statements? I am going to do the audit of the balance sheet P&L. But is it my responsibility as an auditor, CS Sparkle's responsibility to prepare the financial statements? No, preparation of financial statements is the responsibility of the management. It is the responsibility of the company. It is the responsibility of the management. Now, how will I come to know that management, you have fulfilled your responsibility? Whose responsibility? Board of directors, your responsibility to prepare financial statements. How will I come to know that you have prepared the financial statements as per the requirements of accounting standard schedule 2, schedule 3? I take the written representations from the management. That is, I simply tell the management, give it to me in writing that you have prepared the financial statements as per accounting standard schedule 3. Right? Auditor is telling management, you please give it to me in writing. What you give it to me in writing? That you have no other than as disclosed in the notes to account, you have not given any funds to the intermediary with an understanding, whether recorded in writing or otherwise, that it will be used for the benefit of the ultimate beneficiaries of the company. Right? So this is the written representation the auditor needs to obtain from the management. Right? So if we look at the point over here, what does it say? Right? If we come to the section, yes, 143.3JE, and then in the E, if we come to E1, whether the management has represented. Represented means what? WR, written representation. Management has represented means we need to obtain the written representation in writing from the management. Right? You need to obtain it in writing from the management. What? That to the best of their knowledge and belief, other than as disclosed in the notes to account. So if it is disclosed in the notes to account, we have no problem. But other than as disclosed in the notes to accounts, no funds have been advanced or loaned or invested either from the borrowed funds or the share premium or any other sources of fund by the company to any other person or entity, including the foreign entities which are called as the intermediaries. So no funds have been advanced by the company to the intermediary with an understanding, whether recorded in writing or otherwise, that the intermediary shall directly or indirectly lend or invest in any person or entities identified in any manner whatsoever on behalf of the company as the ultimate beneficiaries, or provide any guarantee, security or like on behalf of the ultimate beneficiaries. I've already told you the crux of it over here. What is the crux of it? That other than as disclosed in the notes to account, management, you give us the representation. What representation? That you have not funds, no funds have been advanced by you to the intermediary with an understanding, whether recorded in writing or otherwise, that this money will be used by the intermediary for the benefit of the ultimate beneficiaries of the company. Is it allowed? Yes, but it should be disclosed in the notes. But now what it says? They have given such funds, but they have not even disclosed it in the notes. So now I want a written representation from the management. Are you understanding that? Then, yes, E1. This is E1. Then we have E2. Yes, listen to me carefully. In E2, what happens? The intermediary, it becomes the funding party. The intermediary now becomes the funding party, and the funding party is now giving the money to the company, and now the company is using it for the benefit of the ultimate beneficiaries of the company. Are you understanding? No funds have been advanced, and now E2, no funds have been received. No funds have been received. Are you understanding? No funds have been advanced. And now E2 is what? Other than as disclosed in the notes to account. Management is representing what? That no funds have been received by the company from the... No funds have been received by the company from the funding party with an understanding, whether recorded in writing or otherwise, what? That the money will be used for the benefit of the ultimate beneficiaries of the company. Right? So you understand the situation. I am the company, and then what I am doing? I am giving the money to the intermediary, and intermediary is using it for the ultimate beneficiaries. Right? So company, intermediary using it for the ultimate beneficiaries. This is E1. In E2, what happens? I am not giving it to intermediary. Intermediary is giving it to me. So now the intermediary becomes the funding party. So funding party is giving the money to the company, and company is using it for the ultimate beneficiaries. You understand? No funds have been advanced, no funds have been received. What is situation 1? Company to intermediary. What is situation 2? Funding party to company. Funding party to company. And then these are the ultimate beneficiaries. Is it clear to all of you? Okay. So now I am taking a representation from the management. I am taking a representation. I am telling management, please give it to me in writing that no funds have been advanced, no funds have been received. Right? So, I take a representation from the management. That management, you give me a written representation that the financial statements of a company give the true and fair view. Life is easy. You understand? You tell management, you give me a representation. What? That the financial statements of the company give a true and fair view, and then you issue an audit report saying that financial statements give a true and fair view. And if anybody asks you, "Arey auditor, how you are saying true and fair?" They say, what to do? Management has taken the responsibility. They are saying the financial statements give a true and fair view. Right, so written representation can be a supporting evidence. It could be an additional supporting evidence. It cannot be the only evidence. So now what the auditor needs to do in E3? Now what the auditor needs to do in the E3, right? It says, auditor, you perform the audit procedures. We will discuss in chapter 2 at length, okay, what are the audit procedures. It says, based on the audit procedures that the auditor considered to be reasonable and appropriate, right? Nothing has come to the auditor's attention that the representations under E1 and E2, that whatever management is representing to the auditor under E1 and E2, yes, does not contain any material misstatement, right? Does not contain any material misstatement. That is, they have not represented anything wrong to the auditor. They have not represented anything wrong to the auditor. So, somebody says, okay, oh yes, in this, what you say, we have 100 books in stock. You ask somebody and they told, okay, we have 100 books in stock. So they give you a representation that we have 100 books in stock. But is it better that you also actually go and check whether really there are 100 books in stock? So you ask management, have you given any funds? Have you received any funds? They say, no, auditor, we've not given any funds, we've not received any funds. But will you also perform some audit procedures in order to check that whatever they are representing, there is no material misstatement in that? Right? That there is nothing wrong in what they are representing? Right. So what does it say? Based on the audit procedures performed by the auditor. So I'll come to the E2. But what is the E3? Based on the audit procedures that the auditor has considered reasonable and appropriate. Nothing has come to their notice that caused them to believe that the representations under E1 and E2 contain any material misstatement. Right, and then what is E2? Whether management has represented that to the best of its knowledge and belief other than as disclosed in the notes to account. Same story. Only what is the difference in the story now? No funds have been received. Here what it was, no funds have been advanced. Now it is no funds have been received by the company from any person including foreign entities, that is the funding party, with an understanding, whether recorded in writing or otherwise, that the company will directly or indirectly lend or invest upon other persons or entities identified as the ultimate beneficiaries or provide any guarantee, security or like on the behalf of the ultimate beneficiaries. Right? The same thing I have written over here in this chart. Yes, no material misstatement. It does not contain any material misstatement. And the representation under E1 and E2 does not contain any material misstatement. Is it clear to all of you? E1, E2 and the E3. Right? Will you remember this? Company to intermediary, intermediary to ultimate beneficiaries, that is E1. Then funding party to company and company to ultimate beneficiaries, that is E2. And then E3 is what? That based on the audit procedures, nothing has come to the auditor's attention that the representations under E1 and E2 contain any material misstatement. Right? Clear to all of you? Okay. Right. So that completes our discussion of the 143.3. Right? So if you look into the Reliance audit report, right? So you see these points of reporting over there. What points of reporting you see over there? The management has represented that to the best of their knowledge and belief, no funds have been advanced. Are you seeing it over here? No funds have been advanced or loaned or invested by the company. No funds have been advanced, and then after that it says no funds have been received, and no funds have been received, and then it says the representation does not contain any material misstatement. Then the dividend paid, it is in compliance with section 123, and then now from next year onwards the the accounting software audit trail feature ka point will come. Right? If in this report, this is the report for the year ended 31st March 2022. That is applicable from 1st April 2022. So you will be able to see that point in the 31st March 23 report, which the audit trail feature point. Right? The audit trail feature point. Is it clear to all of you? Right, so what have we discussed over here? 143.3, which is regarding the duty as to the reporting, right? The duty as to the reporting, right? So what does it say? E, no funds have been advanced. What is E? No funds have been advanced by the company to the intermediary. What is E2? No funds have been received by the company from the funding party. Now, funding party, no funds have been advanced to the I discussed with you 3-4 times, still you are saying intermediary, right? No funds have been advanced by the company to the intermediary. No funds have been received by the company from the funding party, and yes, the funding party. And then what does it say? The representations under 1 and 2 do not contain any material misstatement. Based on the audit procedures, the representations under 1 and 2 do not contain any material misstatement. Are you understanding? This is where we had written the 143.3J, and as such other matters as may be prescribed, and these are the other matters over there. Is it clear to all of you? Right, what are we studying? The duties of the company auditor. So first duty, duty as to inquiry. Second duty, duty as to the reporting. Third duty is the duty to report on the additional matters which have been specified by the central government. So central government also has the power, to specify the additional matters of reporting by the auditor. Under this power given to the central government has issued the CARO 2020, in which there are the 21 clauses. There are the 21 points of the reporting, right? In which there are the 21 points of the reporting. So next chapter that we are going to study is going to be regarding the CARO, the company's auditor's report order. Okay, right. Then you have the duty to sign the audit report, right? Who should sign the audit report of the company? Auditor. That means a person who is qualified to be appointed as an auditor of the company under section 141, subsection 1 and 2. Are you understanding? Individual or a firm where majority of the partners are the chartered accountants, or a LLP, but only those partners of the LLP who are the chartered accountants, right? So duty to sign the audit report. What does it say? Whose duty to sign the audit report? The auditor of the company, right? Whose duty to sign the audit report? It is the duty of the auditor of the company, right? So duty with reference to the qualifications, we'll come to that. Right, duty to sign the audit report. What does it say? The person appointed as an auditor of the company shall sign the audit report or sign or certify any other document in accordance with the provisions of section 141(2). What is 141(2)? Right, the firm includes the LLP and the qualifications. This is an important one from the MCQ point. What does it say? The qualifications, observations or the comments on financial transactions or matters which have an adverse effect on the functioning of the company mentioned in the audit report. Right, so any concern regarding the going concern, any such points which the auditor has written in the audit report will be read before the company in the general meeting and will be open to inspection by any member of the company. Right, so who needs to sign the audit report? A person who is qualified under section 141 subsection 2. And then what does it say? Any points in the audit report where there is an explanation, a qualification, adverse remark regarding the adverse effect on the functioning of the company, it says those points will be read read before the company in the general meeting and will also be open to inspection by any member of the company, right? So that is regarding the duty to sign the audit report. Who will sign the audit report? The auditor of the company. Can the auditor tell first year article to sign the audit report on his behalf? Right, say PwC, it is a CA firm, right? So PwC will be having the partners, right? Then they will be having the employees, and these employees would also be the chartered accountants, and it will also be having the articles, right? So who can sign an audit report on behalf of PwC? Right, the partner of the firm, right? Only a partner of the firm, and obviously that partner has to be CA with COP of the ICAI. Only he can sign the audit report on behalf of the firm. Can an employee chartered accountant sign the audit report on behalf of the firm? No, even though he might be a CA. He might be having a COP also, but is he a partner of your firm? No, then he cannot sign the audit report on behalf of your firm, and articles out of question. Right? Can they be signing the audit report of the company? No, they cannot be signing the audit report of the company. Right, so now say PwC. So just an example, 3 partners, CAP, CAW and CAC. Right, 3 partners in PwC. Okay, who has done the entire audit of Growth Limited? Say CAP. Who has done the entire audit of Growth Limited? Say CAP. So can CAP sign the IAR? What is IAR? Independent Auditor's Report. Can CAP sign the audit report on behalf of PwC and company? Yes. Can CAP sign the audit report? He has done the audit. Can he sign the audit report on behalf of the firm? Yes. Can CAW sign the audit report on behalf of the firm? Yes. One partner has done the audit. Can another partner of the firm sign the audit report? Yes. Yes, can another partner of the firm sign the audit report? Yes. Can another C also sign the audit report? Yes. But once you, when one partner is signing on behalf of another partner, before signing, he needs to review the work. He needs to review the work. You cannot say, oh, you have checked, so no need for me to check. No. If some other partner has done the checking, if he only signs, wonderful. But if he has done the work and you are signing, before signing, you will review the work being done by the other partner. Before signing, you will review the work being done by other partner. So any partner of the firm can sign on behalf of the firm. But employee articles, can they sign on behalf of the firm? No, they cannot sign on behalf of the firm. Okay. Right. Now, auditor did the audit of the financial statements, right? The auditor did the audit of the financial statements, and we are yet to get into the details of basic concepts in auditing and all of that. But say, you've understood so far that auditor does the audit of the financial statements in order to express an opinion on the true and fair view. So as a part of my audit, will I also check the inventory of Growth Limited? Example, as a part of my audit, will I check the inventory of Growth Limited? Okay, say inventory of Growth Limited is 2000 crore. I did the audit of this inventory. I will do audit of each and every item of the financial statement. Rather, in your list of the chapters which you wrote yesterday, you need to add one more chapter over there. In the beginning of the class, did we write down the list of the chapters? In that, you need to add this chapter, the audit of the items of the financial statement. Each and every item of the financial statement you need to audit. Does anybody know the items of the financial statement? Do you know the items of the financial statement? Inventory. Only inventory is there in the financial statements of the company. Property, plant, equipment, intangible assets, borrowing, share capital, inventory, trade receivable, trade payable, other current liabilities, loans and advances and the other current assets, cash and cash equivalents, share capital, investments. Ye ho gaya balance sheet. What about the profit and loss? Expenses, purchases, sales, other income, right? All that will be coming in a depreciation, salary expense, all that will be coming in the profit and loss account. So that is one huge chapter which we have regarding the audit of the items of the financial statement, right? So anyways, will I be doing the audit of each and every item? of the financial statements? Yes, I might do sample checking or something. But will I do some checking of inventory? Will I do some checking of debtor? Will I do some checking of share capital? Yes. And now say I did the checking of inventory. How much is the inventory of the company? 2000 crore as per the management. I did the checking and I say what these people are saying. The value of their inventory is only 1500 crore. That means 500 crore the inventory of the company is overvalued. Now will this inventory, will the financial statements give a true and fair view? No, they can't give a true and fair view. So now auditor in his audit report, he will put a qualification in the audit report. And after we finish with Caro, we will come to the chapter of engagement letter audit report, wherein we'll talk about, one auditor you can issue a clean report. What is a clean report? True and fair. And where auditor says that the financial statements of the company give a true and fair view. This is called as a clean report, or it is also called as the unmodified report or the unmodified opinion of the auditor. Right? So the opinion of the auditor could be unmodified. That means it could be a clean report, okay, true and fair, no problem, nothing wrong in the financial statements of the company. And second, the opinion of the auditor could be modified. That means he says no, everything is not right, inventory is a problem, debtor is a problem, share capital. When we do the audit, we might come across some errors in the financial statements. So that means what are we doing? We are issuing a modified opinion. One of the type of the modification is what? It is the qualified opinion. So now if auditor is issuing a modified opinion, or say example a qualified opinion, do you have to give the reason why you are qualifying your opinion? Do you need to give the reason inventory of the company is overvalued by 500 crore? Because if somebody asks what is wrong, you say no, these financial statements are not the true and fair. Or there is something wrong in the financial statements. Do you have a duty to give the reasons for the qualification in the audit report? Yes, auditor, you have the duty to give the reasons for the qualification in the audit report. You simply cannot say there is something wrong. What is wrong? You need to mention in your audit report. Right? So that's the next duty of the company auditor. Then we have the duty as to the branch audit, right? So let us complete our discussion regarding the branch audit, right? So branch audit, which section of the company law? 143 subsection 8, which is regarding the branch audit, right? Which is regarding the branch audit. Right, branch audit. Today morning, did I discuss with you? What did I discuss? Can PwC, who is the head office auditor, also do the audit of the branch? Yes, but can it also be audited by another auditor? Yes. Now, does the head office auditor have access to the BOA? You remember BOA? Books of account of the company maintained at the branch? Yes. There is no question of branch auditor having access to books of account of head office. There is no question for that. Only the head office auditor, he can have access to the books of account of the company maintained at the branch. Okay, right. So now over here, so branch of a company could be, in India, or a branch of a company could be outside India. Okay, right. So say there is a company which is having their head office in Mumbai, and say there is a branch office of the company which is there in Hyderabad. Say there is a branch of the company which is there in Hyderabad. So there is a branch office of the company in India. Now, who can do the audit of the branch in India? One, it says the company auditor himself. Right? The company auditor himself, who you have appointed under section? Yes. Who can do the audit of the branch of the company in India? One, the company auditor himself, who is appointed under appointment of company auditor, section 139. Or a person qualified to be appointed as an auditor of the company under section 141. Right? So company auditor himself, say who is the head office auditor? PwC. So can PwC do the audit of the branch? Yes. Or can another CA do the audit of the branch? Yes. That is what they are saying. Company auditor himself or a person who is qualified to be appointed as an auditor. Say there is another branch of the company in Germany, or say there is a branch of the company in USA. Right? Say there is a branch of the company in the USA. Now, who can do the audit of the branch of the company outside India? One, again, the company auditor, right? So, company auditor appointed under section 139, or a person who is qualified to be appointed as an auditor under section 141. Same? Yes, is it same? Company auditor, or it could be the person qualified under section 141. Now, where is the branch? The branch is outside India. Now, where it is? It is in the USA. In USA, who is the CA over there? It is the CPA, right? The Certified Public Accountant. So, what does it say? A person who is duly qualified to act as an accountant as per the laws of that foreign country. So, person who is duly qualified to act as an auditor as per the laws of the foreign country, right? So the American CPA, can he do the audit of the branch outside India? Yes, he can do the audit of the branch outside India. Are you understanding? So branch is in India. Who can do the audit of the branch? Company auditor himself or any other CA. Branch outside India, company auditor himself, any other CA, or a person who is qualified to act as an auditor as per the laws of that foreign country. Say the branch is in Germany, right? So whosoever is qualified as per the German law to do the audit of the German companies, he can do the audit of the branch, right? The German branch. Okay, right. Now this branch auditor, to whom does he submit his report to? Right, the branch auditor, to whom does he submit his report to? Branch audit report is submitted to the company auditor. It is submitted to the head office auditor, submitted to the company auditor. Are you understanding that? Okay, right. So now listen to me very, very carefully. Right, listen to me very, very carefully. Yes, over here. Okay, so now say company has a head office and say it has only one branch, just to keep my example simple. Okay, say example, the sales of the head office is 90 crore and the sales of the branch is 10 crore. Just to keep my example simple. Okay, so that means in the financial statements of the company, how much would be the sales of the company? 100 crore. Because 90 crore of the head office and 10 crore also, 10 crore of the branch. It is an extension of the company only. So whenever the financial statements of the company are being prepared, will the financial details of the branch will also be included? Yes. Okay. Now say if head office is audited by PwC and branch is also audited by PwC, that means this entire 100 crore has been audited by the PwC, the company auditor himself. But say head office is audited by PwC and branch is audited by E&Y. So now the entire 100 crore has not been audited by the PwC, by the company auditor. So what has happened for PwC? For 90 crore, they have done the checking on their own, and for 10 crore, they have received the report of the branch auditor. Yes, that is E&Y in my example. Are you understanding that? See, if they have only done the audit, then they, then 10 crore also they have only done the checking for that. But there could be a situation where the branches are audited by the branch auditor and that 10 crore checking I have not done on my own. Who has done the checking? Branch auditor, and branch auditor, he has submitted me his report. And now considering, so head office ka report for 90 crore plus the branch auditor ka report for 10 crore, putting this two together, finally the auditor will issue the independent audit report for the 100 crore. The auditor's report is going to be for the 100 crore. But 10 crore, have I done the checking? For 10 crore, has the head office auditor done the checking? No, the checking has been done by the branch auditor. So now the question is whether the principal auditor or the company auditor, can he rely on the work which has been done by the branch auditor or the component auditor? Can the principal auditor rely on the work being done by the branch auditor? It says yes, he can rely. Can the principal auditor rely? Okay, what if I have not done the checking? Another CA has done the checking. 90 crore, say I am principal auditor. 90 crore I did checking. 10 crore, Branch auditor did checking and they gave me their report. And now considering their report, I am issuing the final report to the shareholder. So can I rely on the report of the branch auditor? Yes, I can rely, but I cannot blindly rely. I cannot blindly rely. Why I can, who am I? I am the principal auditor. Why I cannot blindly rely? Because there is a concept of CTBR. What is CTBR? It means continues to be responsible. Right? So tomorrow anything goes wrong with the branch and you have used the report of the branch auditor. You cannot say, no, why you are asking me? I have not done that checking. That checking has been done by branch auditor. No, you continue to be responsible. So even though if I use the work of the branch auditor, I am using it at my own risk. Can I use the work? Yes, but even if I use the work, I cannot shift the responsibility to the branch auditor. If anything goes wrong with the branch also, who is going to be responsible? The principal auditor is going to be responsible. So can you rely? Yes, but you cannot blindly rely. So what you need to do, you need to check the adequacy of the work of the branch auditor. You need to check the adequacy of the work. So these branch auditors, whatever work they have done, you need to check the adequacy of their work, that whatever work has been done by them, whether it is adequate, Are you understanding? You need to check the adequacy of their work. Yes, little bit we are trying to build up the concept over here. Okay, now we have the standards. You know, as standards, whenever I say standards, it has to be the standards on auditing, the SA. Okay, we have the auditing standards in the 600 series, SA 600, SA 610 and SA 620. And I told you, no, total we have 27 standards, 26 standards and one standard on quality control. As such, total there are 46 standards. Right? SA 600 is regarding the using the work of another auditor. SA 610 is regarding using the work of the internal auditor. You know internal auditor? Yes, who is the another auditor I am talking about over here? Branch auditor. Then you have using the work of the internal auditors. And then you have using the work of an auditor's expert. Right, using the work of an auditor's expert. Right, expert, like say company is having some, pieces of art. Okay, now if piece of art, you know pieces of art, paintings, collection, paintings and all of that. Okay, so you see, you are the auditor now. You have access to all the assets of the company. And then you see that in the company, in the fixed assets register, what is fixed assets register? The PP register. There is one painting. There is one painting which has been capitalized at 20 crore. Okay, now you as an auditor access to books of account. You can ask for all information, explanation. And you are saying 20 crore. Now you say, I have never seen a 20 crore painting in my life. ऐसा क्या है वो painting में? And you're very curious to see. So you tell, there is some coordinator from the client side for you, know. So you tell him that please, I want to, today morning what you were saying, I want to see the plant and machinery. Now you're behind your life painting. And now they say, array, that painting is in the managing director cabin. So, you know, we need special permission and access to, you know, go and see that painting. So then they say, no problem. You are auditor. You can ask for any information. So one day I will arrange for you that we will go over there and you see the painting over there. And you take the CA over there to see the painting. And then CA is like, you know, you are so curious. No, you are about to see a 20 crore painting, say 3x4. Feet, some small painting you are about to see. Okay, and then they say, you know, say the client fellow is also saying, oh, what a marvelous piece of art and so amazing, and look at the colors, look at the way in which the painting has been done and everything. And now they are asking CA, what is your opinion regarding this painting? So our CA says, like, what? You want me to be polite or you want me to be honest? No. So he says, yes. Yes, you want me to be, yes, what does it say? In so CA says, if I want to be honest with you, then see material required, the canvas and everything and the colors and the brushes and everything will be required. Say whatever, like 1 lakh rupee, and a maximum, and like 1 lakh is also too much. Then labor, like say 50 hours are required for that painting. And 50 hours are required for making that painting on 100 hours or something, right? So again it says paid on, if you check on the hourly basis, say on the higher side, 5 lakh rupees. Like I'm just talking about everything on the higher side. And then other items like depreciation and all the, what do you say, overheads over there, right? Say that is coming to 4 lakh. Auditor says, for this also I'm keeping a stone on my heart. But still I am telling, according to me, the value of the painting should be 10 lakh. And what is the actual value of the painting which the company has purchased it for? 20 crore. So it says, auditor, not possible for you to check the valuation of the painting. Let us call an expert. You understand? Let us call an expert, because he will only have the knowledge. He will only know what is the value of this particular painting. Right? So sometimes in an audit, the auditor may have to use the work of the auditor's expert. Are you understanding that? Like sometimes in an audit, you have to use the work of an engineer. You understand? No. Say I go for the audit of Tata Motors. Okay. And in Tata Motors, will there be raw material? Will there be work in progress? Work in progress? Will there be finished goods? Okay. Now, I being a chartered accountant and I go and see their work in progress and they say that, see auditor, this car is 30% complete. Now what I understand? How do you say that it is? See, if you ask me vegetable which I am cooking, how much percentage it is complete, that I can tell you. But now this car, if you tell me 35% also, I will say yes. You tell me 40% also, I will say yes. Because I don't know, no, on what basis you are assessing the stage of completion of the work in progress. So there you may require the assistance of an engineer. Right? So that is again an expert. Are you understanding? Say company is having oil and gas reserves. You know oil and gas reserve refineries. And they are having big refineries over there. And they are telling auditor, okay, you know in this refinery we have 1 billion ton of oil or something like that. No, auditor says, how do I come to know? Just everywhere what I see is oil, oil. But now I don't know how much is the oil over there. Right? So you may require a petrochemical engineer for the same. Okay. Now, basically we have two types of experts. Listen to me. One, we have the management's expert, and second, we have the auditor's expert. What is management's expert? If expert is appointed by the management, then management's expert. If expert is appointed by the auditor, then auditor's expert. So in an audit, I may have to use the work of the branch auditor. I may have to use the work of the internal auditor. I may have to use the work of the auditor's expert. I may have to use the work of the management's expert. Whosoever's work I use, I continue to be responsible. And a sole responsibility for the audit opinion expressed. That is why what you need to do, you need to check the adequacy of the work. That is why what you need to check is the adequacy of the work. Okay. Auditor's expert is discussed in essay. Auditor's expert is discussed in essay 620. Management's expert is discussed in essay 500. Later on we will study essay 500, which is regarding the audit evidence. Later on we will study essay 500, which is regarding the audit evidence. Okay, right. Anyways, coming to our current situation. Okay, principal auditor, can he rely on the work of the branch auditor? Yes, he can rely, but he cannot blindly rely. Why? Because he continues to be responsible. That is why principal auditor, you need to check the adequacy of the work of the branch auditor. Okay. And how to check the adequacy of the work? That is discussed in essay 600. Then if you want to use the work of internal auditor, how to check the adequacy of the work is discussed in essay 610. And if you want to use the work of the expert, how to check the adequacy of the work is discussed in essay 620. Now, if you look at if you look at the auditing standards which are applicable for your exams, I told you now, out of 38, it is only 26 auditing standards and 1 standard on quality control. It is only SA 610 which is applicable for your exams. For CA Inter, what is applicable is SA 610. 600 not applicable, 620 also not applicable. But though 600 is not applicable, 600 is not applicable, in the company audit chapter, in the study material of the ICAI, in the company audit chapter, in the study material of ICAI, they have mentioned about SA 600. So this standard is not applicable but applicable. If you look into the list of the applicable standards, then that 600 is not there. But if you come to company audit chapter, there you find SA 600. So not applicable but applicable. Okay. 620 auditors expert not applicable. But even though if auditors expert is not applicable, management's expert is applicable in SA 500 and SA 610 is anyways applicable. Okay. Right. So anyways, right now what I want to discuss with you is SA 600, which is regarding the using the work of another auditor. Okay. Right. Read the line over here. When the accounts of the branch, yes, everybody please read this line. When the accounts of the branch are audited by a person other than the company auditor, there is a need for a clear understanding of the role of such auditor and the company auditor in relation to the audit of the accounts of the branch and the audit of the company as a whole. Also, there is a great necessity for a proper rapport between these two auditors for the purpose of an effective audit. You understand? Rapport between the company auditor and the branch auditor. In recognition of these needs, the Council of the ICAI has dealt with these issues in SA 600. So now what you need to do, you need to check the adequacy of the work of the branch auditor, and in order to check the adequacy of the work, you will do the evaluation of the work of the branch auditor. Evaluation of the work of the branch auditor or the component auditor. Why you need to do the evaluation of the work? Why you need to check the adequacy of the work? Because you continue to be responsible. So can you rely? Yes, you can rely, but you cannot blindly rely. You need to do the evaluation. What evaluation? Like, so in my example, what I had told you, total revenue of the company, sales of the company, 100 crore, 90 crore head office and 20 crore branch office. And this 10 crore revenue of the branch has not been audited by the company auditor. It has been audited by the branch auditor. Are you understanding that? And now I have to use the work of the branch auditor. Are you getting that? So now I am doing the evaluation of their work. How do you do the evaluation of the work of the branch auditor? You need to look into the C cube ADV. Right? One, what you are going to do, you are going to check the competence of the branch auditor. You will check whether that branch auditor is a chartered accountant, right? Because it has to be a chartered accountant qualified under section 141. And if the branch is outside India, then it could be a chartered accountant or a person who is qualified as per the laws of that foreign country. So one, you need to consider the competence. Second, you need to coordinate with the other auditor while planning the work. Right? So now the principal auditor has to consider the branch auditor as his younger brother. The principal auditor has to consider the branch auditor as the younger brother and tell him that, you know, these are the areas you need to check. These are the samples which need to be verified. This is the status of the internal controls in the company. You need to give me your report by 20th April because I have to issue the final report on 25th of April. So what does it say? Coordinate with the other auditor. Who will coordinate? The principal auditor has to coordinate with the other auditor while planning the work. Who has to follow SA 600? What is the title of SA 600? Using the work of another auditor. So who is using the work of another auditor? The principal auditor, the company auditor. So who needs to follow SA 600? Company auditor, right? When he is using the work of the branch auditor. So it says company auditor, please coordinate with the other auditor while planning the work. Right, then it is not a one-way communication that I am principal auditor and I am only communicating to the branch auditor. It says even you need to consider the significant findings of the branch auditor. Right, so consider the significant findings of the other auditor. That branch auditor in the branch, he found out that there is a fraud. Branch auditor found out that in the branch of the company there is a fraud. Now you need to check whether such fraud is happening in the company as a whole. Right, so you need to consider the significant findings of the other auditor. Then it says you need to advise the other auditor as to the auditing, accounting and the reporting requirements. Right, the auditing, accounting and the reporting requirements. Who needs to advise? Company auditor. Who needs to advise? Company auditor. To whom? To the branch auditor. So advise the other auditor as to the auditing, accounting and the reporting requirements. Then it says discuss with the other auditor. Discuss, call him, have a meeting with the other auditor, and if required you could also visit the other auditor. Right, so discuss on phone, or you can actually go and meet the other auditor or call him to your office or something like that. Right, so now many a times, you know what does the principal auditor do? Many a times, what does the principal auditor do? He sends a questionnaire to the branch auditor. He sends a checklist to the branch auditor regarding what all he is expecting from the branch auditor, what all work should be done by the branch auditor. And then the branch auditor has to respond to the questionnaire. Why so much head the company auditor is breaking behind the branch auditor? Why so much head the company auditor is breaking behind the branch auditor, sending a questionnaire to him, advising him, discussing with him, visiting him? Why? CTBR continues to be responsible. Tomorrow anything goes wrong with the branch audit also, in the branch report also, who will be responsible? The principal auditor will be responsible, right? So the company auditor will send a questionnaire to the branch auditor, and the branch auditor needs to respond to the questionnaire on a timely basis. The branch auditor needs to respond to the questionnaire or follow the checklist. Are you understanding that? Right, so that is regarding the evaluation of the work of the branch auditor. How do you evaluate their work? C cube ADV. Right, so what does it say? You visit the component, right? Then generally are you allowed to rely on their work? Yes, but you cannot blindly rely unless there are circumstances which indicate that you should visit the component. What is component? Branch, right? And then it says advise the other auditor as to the accounting, auditing, reporting requirements, coordinate with the other auditor, discuss with the other auditor, visit the other auditor, and also consider the professional competence of the other auditor. So I've already summarized it for you, calling it as the C cube ADV, right? C cube ADV. Okay. And just one last point over there. What is the last point over there? Okay, principal auditor. Principal auditor. Can you access the books of account of the company maintained at the branch? Yes, the branch books of account, principal auditor, can you access? Yes, even though if they are audited by the branch auditor, right? But principal auditor, right? Principal auditor, can you access the books of account of the company maintained at the branch? That is the branch books of account. Yes, principal auditor, you can access. But principal auditor, can you access the working papers of the branch auditor? Right? Can you access the working papers of the branch auditor? Right? Can the principal auditor access the working papers of the branch auditor? No, he cannot access the working papers of the branch auditor. Working paper, audit file, audit documentation. So that is the property of the branch auditor. That is the property of the branch auditor. What E&Y will give to PwC is only the branch audit report. Will they give them their working papers? No. But can principal auditor access the books of account of the company maintained at the branch? Yes. But can they access the working papers of the branch auditor? No. And branch auditor, does he report to the shareholders? No, he reports to the company auditor. He reports to the company auditor or the principal auditor. Is it clear to all of you? Okay, right. We have one more duty of the company auditor, which is 143.12. What is 143.12 over here? The duty to report the fraud to the CG. Right. So if in the course of audit you come across any fraud, what is the responsibility duty of the auditor? If an auditor, I am doing the audit and I come across a 10 crore fraud, what is my duty? I need to report it to the central government. Okay. But now, branch auditor comes across a fraud of 10 crore. Branch auditor comes across a fraud of 10 crore. Should he report it to the principal auditor or should he directly report it to the central government? You understand the question, right? I am head office auditor. If I come across a fraud, I will report it to the central government. Now, branch auditor, he came across a fraud. Should he report it to the principal auditor or should he report it to the central government? Right? He needs to report it to the central government. He needs to report it to the central government. 143.12 is also applicable for the branch auditor. Right? 143.12 is also 143.12. What is 143.12? Duty to report the fraud to CG. Is it also applicable to the branch auditor? Yes, the branch auditor also needs to directly report the fraud to the central government. You understand that? Okay, right? So who can do the audit of the branch? Branch in India, branch outside India. And then branch auditor will submit his report to the Yes, provided that the branch auditor shall prepare a report on the accounts of the branch examined by him and send it to the auditor of the company. That means he will send it to the company auditor who shall deal with it in his report in such manner as he considers necessary. And the branch auditor shall submit his report to the company auditor, and reporting of fraud by the auditor shall also extend to the branch auditor to the extent it relates to the concerned branch. So that is what I told you. 143.12 is directly applicable to the branch auditor also. 143.12 is also directly applicable to the branch auditor also. Okay, right? So is this clear to all of you? The duty as to the branch audit, right? The duty as to the branch audit, right? Then you have the duty to comply with the standards on auditing. Auditor, can you do the audit as you wish? No, you have to do the audit as per the auditing standards. Which auditing standards? The auditing standards which have been issued by the ICAI, right? Duty to comply with the standards on auditing. You know, rather if I come to the audit report, right? Rather if I come to the audit report, and in the audit report if I come to the basis for opinion paragraph, we will see the entire audit report format later. But for the time being, if I come to the basis for opinion paragraph in the audit report, right? Will you yes, where am I right now? I am in the independent audit report of Reliance Industries Limited. Is it right? Right? To the members of Reliance Industries Limited, independent auditors report. In that independent auditors report, now I am showing you which paragraph? The basis for opinion paragraph. Will you read the first line of the basis for opinion paragraph? Read. What you are reading? We conducted our audit of the, auditor, audit firm. We conducted our audit of the standalone financial statements in accordance with the standards on auditing as specified under section 143(10) of the Companies Act 2013, right? So it is the duty of the auditor to comply with the auditing standards. Is it right? It is the duty of the auditor of the company to comply with the auditing standards, right? So duty to comply with the standards on auditing. Which standards on auditing? The one which have been issued by the ICAI. And rather what we have seen in our audit report also we write down. What do we write down? We did not do the audit as we wish. We have done the audit in accordance with the standards on auditing specified under section 143(10) of the Act. And then coming to the last duty of the company auditor, the duty to report the fraud to CG, right? So this is again a super favorite one of the ICAI. You can mark it as 5-star. And super favorite one, right? So now we come to the duty to report. Duty to report what? The fraud to CG, that is the central government, 143(12), right? Duty to report the fraud to CG, right? So I am doing the audit of the company, and while doing the audit of the company, because I am the statutory auditor of the company, and while doing the audit of the company, if I come across an offense which involves the fraud for an amount which is 1 crore or above, for an amount which is 1 crore and above, it says you need to report the fraud to the central government in the manner as may be prescribed, right? So what does it say? If an auditor, okay, so now is your objective of audit to detect a fraud? Is detection of fraud and error the objective of your audit? No, the objective of your audit is true and fair view. That's your bread and butter. And not to express an opinion on the true and fair view. But while you were doing the audit, you came across certain instances of fraud. Now what does it say? You have a duty to report the fraud to the central government. So what does it say? If an auditor, in the course of performance of his duties as an auditor. So you were doing your audit in the routine course. If an auditor in the course of performance of his duties as an auditor has reasons to believe, right? Not reasons to suspect. The auditor has reasons to believe. What? That an offense involving fraud amounting to 1 crore or above, 1 crore or above is being, that means currently this fraud is happening in the company, or has been, that is in the past this fraud has happened, in the last 1 year it has happened in the company, or in the last, in the previous past it has happened, is being or has been committed against the company by its officers or employees, right? So who are doing the fraud? The officers or employees of the company. And who came to know about it? The auditor in the course of performance of his duties as an auditor. How much is the amount? 1 crore or above. Then what does it say? The auditor shall report the fraud to the central government in the manner as may be prescribed, right? So report the fraud to the central government in the manner as may be prescribed, right? So 143(12). What is 143(12)? Right? Yes, I'm coming over there, right? What is 143(12)? The duty to report the fraud to the CG. Right? So what does it say? If an auditor in the course of performance of his duties as an auditor has reasons to believe that an offense of fraud which involves or is expected to involve individually an amount of 1 crore or above is being or has been committed against the company by its officers or employees, the auditor shall report the matter to the CG within such time and in such manner as prescribed. Right? Within such time and such manner as may be prescribed. Are you understanding that? Okay. Right. So now we have two possibilities over here. What are the two possibilities which we have over here? Fraud is less than 1 crore or it is more than or equal to 1 crore. So 99,99,999. Less than 1 crore, or it could be 1 crore or above. Okay. Now let us talk about the left hand side first. What is the left hand side? When the fraud is of less than 1 crore. What does it say? Auditor, you were doing your audit. And while you were doing your audit, yes, you came to know about a fraud of 50 lakh, example, because it has to be less than 1 crore. So 50 lakh, or it could be 10,000, anything which is less than 1 crore. Then what does the standard say? What does the 143.12 say? What does it say? Immediately. Now, when Companies Act 2013 came, earlier it was 1956 law, then after that came the Companies Act 2013, right? Why did the Companies Act 2013 started putting so much emphasis on fraud reporting, 143.12, and then under section 211 of the company law, there is something called as the SFIO. What is SFIO? Serious Fraud Investigation Office, right? There is something called as the Serious Fraud Investigation Office, right? Then you see that they also have the IFC reporting, which is now required under the company law. There is removal of the auditor by the tribunal or the CG. Then there is punishment for fraud under section 447, at least equal to the amount of fraud which may extend to 3 times the amount involved in the fraud. It says, what happened to company law all of a sudden? Why 1956, such a old, vintage law over there? And why they had to revamp it, right? Why they had to revamp this law, right? Because of the Satyam fiasco, right? Because of the Sahara scam, because of the Sharda chit fund scam, which happened in West Bengal. These are the major reasons, like regarding why these new requirements of the law have come over there. You understand? Now, listen to me. You might have heard about the Enron fraud or something which happened in the US or so. Right, the Enron company, the accounting fraud which happened over there. Right, so when this fraud happened in the US, when this Enron fraud, like in India, what fraud happened? Satyam. Example. So in US, when we come to the chapter of fraud, I'll talk more about fraud and how the frauds are committed and these frauds also. Right. But when Enron fraud, when it happened in the US, okay, right, what does it say? They came up with a law called, in US, they came up with a law called as the Public Company Accounting Reform. The Public Company Accounting Reform and the Investor Protection Act of 2002. The Investor Protection Act of 2002. Now this was what? This was a US law. What do you think? Which Indian companies had to comply with this US law? Which Indian companies had to comply with this US law? Those Indian companies which were listed on the US Stock Exchange, NASDAQ, SEC, Securities Exchange Commission. Like Infosys, is it listed in BSE, NSE? Yes. Is it also listed on NASDAQ? Yes. So will it have to comply with this US law also? Yes. So those Indian companies which were listed on the US Stock Exchange, right? They had to comply with this Public Company Accounting Reform and the Investor Protection Act of the 2002. Okay, but this law, nobody knows the name of this law generally. This law is very popularly called as the Sarbanes-Oxley Act 2002. It is very popularly referred to as the Sarbanes-Oxley Act. They've created one more short form for it called as the Sarbox, or sometimes they only call it as the SOX. Those are the names. Now you might wonder, na, कि ये क्या है Sarbanes and Oxley? Like why it is referred to as the Sarbanes-Oxley Act. So these are the surnames of the fellow who had done those fraud. So in the memory of those fellows, the law became very popular as the Sarbanes-Oxley Act. So now in Indian context, you have the Companies Act 2013, and you see 143.12, duty to report fraud to CG, section 211, Serious Fraud Investigation Office. You say, why all this? Because of Ramalinga Raju and Subroto Roy. So if we want to follow the footsteps of the US law, if we want to follow the footsteps of the US law, the Indian Companies Act should be called as the Raju and Roy Act 2013. Malia, okay? So any of them, right? So Raju and the Roy Act 2013. Why? Because it is because of these fellows. Like you might be wondering, no? Right now we discussed E1, E2, E3. Yeah, why this E1, E2, E3 has come? Right? It has come because of the ILFS. It has come because of the DHFL. So what happens, no? Companies, they do they do the fraud. Then they say, oh, that's a loophole, auditor. Then who they find? Auditor. Okay, auditor, you report on this. Anyways, the person who has to do a fraud will find out the new way to do the fraud. But then it comes under the, what do you say? It comes under the duties of the auditor, right? So anyways, what we are talking about over here is the duty to report the fraud to CG, right? So what did I say? The fraud could be of less than 1 crore, or the fraud could be of 1 crore or above. Okay, right. So now if the fraud is of less than 1 crore, then what does it say? Immediately. What does it say? Immediately. Right. So when the draft of the Companies Act 2013 had come, when the original Companies Act 2013 came, it only said immediately you need to report the fraud to the audit committee or the board of directors. No, auditor said, let me breathe, no. Like immediately, how to interpret? They said immediately you need to report the fraud to the audit committee board of directors. Then they said like how to interpret immediately, right? So later on they got a modification over there saying immediately but not later than 2 days. Right? Immediately but not later than 2 days. The auditor will report the fraud to the audit committee or the board of directors. Right. What will you report to the audit committee board of directors? The nature of the fraud, the approximate amount involved, the nature of the fraud, the approximate amount involved, and the parties involved. Right, and the parties which are involved in the fraud. This the auditor has to report to the audit committee or the board of directors immediately but not later than 2 days. Okay, right. Then do you know something called as the annual report of the company? Right, the annual report of the company. In the annual report you have the independent auditor's report and the financial statements. In the annual report of the company you also have the board's report, right? The board of directors report, right? The board's report. So it says in the board report, in the board report of the company, you have to give a disclosure. What disclosure? The nature of the fraud, the approximate amount involved. And now say, let me take an example of a fraud. Okay, what the directors or what the employees of the company have done, they have done a misutilization of the credit card of the company. You understand? They have done a misutilization of the credit card. Okay, it was company credit card, but they used it for their own expense. This will also come under 143(1)(e), whether any personal expenses have been charged to the revenue account. Okay, so what is the nature of the fraud? Misutilization of credit card. What is the amount involved? Say 70 lakh. And who are the parties involved? Say the 3 employees of the company. Now, in the board's report, what disclosure you need to give? The nature of the fraud, the misutilization of credit card, the approximate amount involved, say 70 lakh, and what does it say? Now, whatever fraud has taken place, they can take the remedial action for it, or there might not be any remedial action taken. So what does it say? Remedial actions taken, if any. Right? So if remedial actions are taken, then you mention regarding what are the remedial actions which have been taken and the name of the parties involved. But when will the name of the parties come? When no remedial action has been taken. So in the board report, when will you mention the name of the parties? When no remedial action has been taken. If remedial action is taken, then just mention about the remedial action which has been taken. Then don't mention the name of the party. But if remedial action is not taken, then you need to mention the name of the party. Okay. Now, this is when the fraud is of less than 1 crore. Are you understanding one part of the story? Right? This is if the fraud is less than 1 crore. Right? This is when the fraud is of less than 1 crore. Right. Now we come to fraud of 1 crore or above, right? So now we come to the fraud of 1 crore or above. Now also what does the law say? Same thing. What same thing? Immediately, right? Immediately, but not later than 2 days. You report the fraud to the audit committee or the board of directors. So here also starting point, wait, you can't directly go to central government. Okay, wait. Immediately, same story, immediately but not later than 2 days, you report the fraud to the audit committee, board of directors. You seek their reply or observation for within 45 days. You seek their reply or observation within the 45 days. And now two things may happen. What two things may happen? The board of directors, audit committee, they reply or they do not reply. Are you understanding that? You found out a fraud of 10 crore. So now is it 1 crore or above? Yes. So now what you do? Immediately but not later than 2 days. You report it to the audit committee or the board of directors and you seek their reply or observation within the 45 days. And now what may happen? They may reply or they may not reply. If the audit committee, board of directors, they reply. Are you listening to me? If the audit committee, board of directors, they reply, then it says within 15 days from the date of reply. Within 15 days from the date of the reply, now you will report the fraud to the central government. Now you will report the fraud to the central government. And if they do not reply, then within 15 days after the expiry of 45 days, because 45 days so I'll have to wait only, no? So if, say, today I came to know about a fraud, tomorrow I reported to audit committee, after tomorrow, after 3 days they reply. So then after 3 days, within 15 days. So within 15 days from the date of reply. But in case if I reported to the audit committee board, they don't reply. How many days I'll wait for? 45 days. On the 45th day also they don't reply. Then within 15 days from the expiry of 45 days, you now need to report the fraud to the central government, right? So now report the fraud to the central government. Are you understanding that? What will you will report to the central government? The original reporting which you had done to the audit committee, board of directors, then also the reply which has been received from the audit committee, board of directors, and any explanation, any additional points which the auditor wants to mention regarding the reply. And in case if there is no reply, then what does it say? The report which you had originally submitted to the audit committee, board of directors, also a note. What note you will put? Okay, there has been no reply of the audit committee, board of directors, right? So if there is a reply, the reply, and if there is no reply, a note that there has been no reply of the audit committee, board of directors. Now you report it to the central government. Okay, right? You report it to the central government. That means your letter has to be addressed to the Secretary, Ministry of Corporate Affairs, right? So to the Secretary, Ministry of Corporate Affairs. It has to be on the letterhead of the auditor. It has to be on the letterhead of the auditor. What does it say? The membership number of the auditor, the contact number, yes, the membership number, the contact number, the mobile number of the auditor, right? And even the name of the firm and all should be given in the reporting of the fraud. Then what does it say? The communication has to be done to the central government either by the registered post or it has to be done by the speed post, followed by an email confirmation of the same. So you send registered post or you send the speed post, but it has to be followed by an email confirmation of the same. The reporting of the fraud has to be done to the central government in form ADT 4. Right? The reporting of the fraud has to be done to the central government in the form ADT 4, right? It has to be done to the central government in form ADT 4, right? And then we also have the Cost auditor. Cost auditor, which section? Section 148. And then you also have the secretarial auditor. Secretarial auditor, which section? Section 204. Right, section 204. So what does it say? These provisions of 143.12 are mutatis mutandis. Mutatis mutandis. What is mutatis mutandis? As it is. Right, mutatis mutandis, as it is. They are also applicable to the cost auditor and also applicable to the secretarial auditor. So cost auditor, you come to know about any fraud. Do you need to report it to CG? Yes. Secretarial auditor, you come to know about any fraud. Do you need to report it to CG? Yes. And say, the auditor does not report the fraud to CG. You come to know about the fraud and you of 1 crore or above, and cost auditor, statutory auditor, secretarial auditor, you don't report it to CG. Then what is the penalty? What does it say? Listed company, the penalty is 5 lakh, and any other company, the penalty on the auditor is 1 lakh. Right, listed company, how much penalty? If you don't do the fraud reporting to the central government, 5 lakh, and any other company, 1 lakh, right? Any other company, it is the 1 lakh. Are you understanding that? Duty to report the fraud to the CG. Are you understanding that? If an auditor in the course of performance of his duties as an auditor has reasons to believe that an offense involving fraud 1 crore or above is being or has been, right, committed against the company by its officers or employees, the auditor will report the fraud to the central government. Then we said 2 possibilities. Fraud is of less than 1 crore or the fraud is of more than or equal to 1 crore. If it is less than 1 crore, then what does it say? Immediately but not later than 2 days, you report it to the audit committee or the board of directors, and in the board report of the company also it needs to be reported, right, by the board of directors. However, if the fraud is of 1 crore or above, then what does it say? Immediately but not later than 2 days, you report again the fraud to the audit committee, board of directors, and seek their reply or observation within the 45 days. And then they may reply or they may not reply. If they reply, then within 15 days from the date of reply, and if they do not reply, then within 15 days after the expiry of the 45 days, you report the fraud to the central government, right? So if there is a reply, you send the reply, and if no reply, you write down a note saying that there has been no reply of the audit committee, board of directors. The letter has to be addressed to the Secretary, Ministry of the Corporate Affairs. It has to be on the letterhead of the auditor, right? The audit firm. Even the membership number, contact number, the seal of the audit firm has to be put on the report. Yes, the fraud reporting. It has to be sent by registered post or the speed post, followed by an email confirmation of the same. The reporting has to be done in form ADT 4, and these provisions are also applicable to the cost auditor and the secretarial auditor. And then what is the penalty if the fraud reporting is not done? Right, so if I do the reporting that there has been the bogus recording of expenses of 20 crore in the company, bogus expenses of 20 crore have been recorded in the company, and that is why the fraud which was done by the employees of the company was revealed. And then that is why those employees, they had to leave the job. They were removed from the organization, and so now can those employees take an action against the auditor, that auditor, because of you we lost our job? You understand? They were doing something wrong, no? The bogus recording of the expenses. So it says it will be no contravention if the reporting by the auditor is done in good faith. Right? There will be no contravention if the reporting by the auditor is done in good faith. Right? So over here, this is if the fraud is of less than 1 crore. What you need to do? If it is less than 1 crore, then immediately but not later than 2 days, the auditor will report the fraud to the audit committee, board of directors, nature of fraud, amount involved, parties involved. And then in the board report of the company, you need to give the nature of the fraud, amount involved, parties involved if remedial action is not taken, and if remedial action is taken, then the remedial action which has been taken. This is if the fraud is of less than 1 crore, and if the fraud is of 1 crore or above. Then it says report the matter to the board or the audit committee as the case may be within immediately but not later than 2 days, and seek their reply or observation within 45 days. On receipt of the reply or observation, now you forward the report along with the reply or the observation along with the comments of the auditor to the central government within 15 days from the date of the receipt of the reply or observation. However, if there is no reply, fails to get any reply or observation within the stipulated period of the 45 days, he will forward his report to the central government along with a note containing the details that there has been no reply or observation from the audit committee or the board of directors. The letter has to be sent to the report has to be sent to the Secretary, Ministry of Corporate Affairs in a sealed cover by registered post acknowledgement due, that means by registered post or by speed post, followed by an email confirmation of the same. The report has to be on the letterhead of the auditor containing the postal address, email address, contact telephone number, mobile number, and signed by the auditor with a seal and the indicator's membership number. The report will be in the form ADT 4. Then these provisions mutatis mutandis are also applicable to the cost auditor and the secretarial auditor. And then what does it say? No duty of the auditor shall be regarded as having been contravened if the reporting is done in good faith. Right? So auditor does not have any personal agenda regarding any employee or directors of the company. And what is the penalty? It says listed company 5 lakh and any other company it would be 1 lakh. Right, so this is what we have discussed over there, right? So, and these are all the duties of the company auditor, right? These are all the duties of the company auditor, yes? Okay, right, so these are all the duties of the company auditor, right? So we have completed our discussion on section 139, appointment of the company auditor, 140, removal, 141, qualifications and the disqualifications, 142, auditor's remuneration, 143, rights and duties of the company auditor, 144, auditor not to render certain services, 145, auditor to sign the audit report, 146, auditor to receive notice and attend the general meeting. And now we are left with 147 and 148. What is 147? Right, the punishment for the contravention. Okay, right. So let us now study section 147, which is regarding the punishment for the contravention. Right, the punishment for the contravention. Right, contravention of section 139 to section 146 of the Companies Act 2013. And now, who may have not complied with the provisions of the Companies Act 2013? It says one, either the company has not complied with the provisions or the auditor has not complied with the provisions of this section. Like auditor should have done the fraud reporting, but this fellow has not done the reporting. Or auditor needs to file the, auditor needs to file the form ADT 3, but he has not filed the ADT 3 or something like that. Right, so now, if the company, yes, so this section 147 is trending right now. Lot of questions coming in the MCQ for this one. Right, so what does it say? If the company has not complied with the provisions of section 139 to 146, both inclusive. So, who has not complied? Company has not complied with the provisions of section 139. That is, they did not appoint the first auditor board of directors within 30 days. They did not fill the casual vacancy in the office of the auditor. Company has not complied with the provisions of section 139 to section 146. That is, they removed the auditor before the expiry of his term without taking the prior approval of CG. That means company has not complied with the provisions of section 139 to section 146, both inclusive. Then what does it say? The company shall be liable to pay a fine which shall not be less than 25,000, which may extend up to 5 lakh. Right, the company will be liable to a fine which shall not be less than 25,000, which may extend up to rupees 5 lakh. And then it says every officer of the company, every officer, the directors of the company who has not complied with the requirements of this section will be liable to a fine which is not less than 10,000, which may extend up to rupees 1 lakh. Which may extend up to rupees 1 lakh, right? So this is the punishment for the company and the officer, right? If they don't comply with the provisions of section 139 to section 146 of the Companies Act. What does it say? The company will be liable to a fine of 25,000 to 5 lakh, and every officer of the company will be liable to a fine of 10,000, but which will not extend rupees 1 lakh. Okay. Now the auditor of the company, now who? The auditor of the company has not complied with the provisions of section 139, section 144 and section 145. Right, so for company and officer, they mentioned all the sections. Which all sections? 139 to 146, both inclusive. But for the auditor, they are only talking about the 3 sections. Appointment of the company auditor, auditor not to render certain services, and auditor to sign the audit report. What auditor did? Allowed first year article to sign the audit report. No, so he is not complied with the provisions of section 145. Then what does it say? The auditor of the company will be liable to a fine which shall not be less than 25,000, which may extend up to rupees 5 lakh, or 4 times the remuneration of the auditor, whichever is less. Right, so is it similar to the fine of the company? Is it similar to the fine of the company? Yes, but here what does it say? 25,000 to 5 lakh, or 4 times the remuneration of the auditor, whichever is less. So say your audit fee is 2 lakh, right? So up to 8 lakh, right? So 25,000 to 5 lakh or 8 lakh, whichever is less, right? Whatever is your audit remuneration, 4 times of the audit remuneration. Are you understanding this, everyone? Okay. Now, there are 2 possibilities which they have created over here. One, the auditor by ignorance did not comply with the requirements of section 139, 144, 145. He did not know, okay, oh, articles are not allowed to sign. And that is why he allowed the article to sign, and out of ignorance. And second, the auditor. Second is what? The auditor willfully or knowingly, yes, willfully or knowingly, the auditor has not complied with the requirements of section 139 to 139, 144 or 145. Then what does it say? Now the auditor will be liable for imprisonment not extending 1 year. So there is no minimum imprisonment, but on the higher side the imprisonment could be up to 1 year, and with fine which shall not be less than 50,000, which may extend up to 25 lakh, or 8 times the remuneration of the auditor, whichever is less. And the story doesn't stop over here. Company law is very angry with the auditor. Why? Because auditor knowingly, willfully has not complied with the requirements of section 139, 144, 145. He knows he should not provide actuarial services to. He knows, auditor, I am the auditor of the company. I know I should not provide actuarial services to. I should not provide actuarial services to company, holding company and the subsidiary company. Still he provided. Knowingly, willfully. Right? He provided the actuarial services to the company, or he allowed the article to sign the audit report. So now what does it say? 1 imprisonment up to 1 year, fine which shall not be less than 50,000, which may extend up to 25 lakh, or 8 times the remuneration of the auditor, whichever is less. And in addition to that, what does it say? The auditor needs to pay for the damages which have been suffered by the company, which have been suffered by the creditors, which have been suffered by the members of the company because of the wrong negligence of the, because of the negligence of the auditor. So it says the creditor suffered a loss because the auditor did not do the audit properly. So it says, auditor, you have to pay for the damages to the creditor, or you have to pay for the damages to the members or to the regulatory authorities or to the company. And they are so angry with the auditor. It says, auditor, you also need to refund the remuneration which you have received from the company. Right? So whatever remuneration you receive, 2 crore, 5 crore, whatever, it says refund the remuneration received also by the auditor. Right? So pay for the damages and also refund the remuneration. And whose liability it will be to pay the fine? The liability will be of the firm. Civil liability is of the firm, but criminal liability will be only of the concerned partner. That we've already seen where? Tribunal, removal of auditor by tribunal or the central government, right? By the tribunal or the CG, right? So this is section 147. What is section 147? The punishment for the contravention. So who has contravened? The company and the officer. And then second, who has contravened? The auditor. Auditor either out of ignorance, unknowingly, unwillfully, and second, the auditor knowingly, willfully has not complied with the requirements of 3 sections. Which 3 sections? 139, 144 or 145. Okay, right. So that is the section 147, which is regarding the punishment for the non-compliance. What does it say? Contravention by the company. Right? Company has not complied with 139 to 146, company shall be liable to fine which shall not be less than 25,000, which may extend up to 5 lakh, and every officer of the company fine which shall not be less than 10,000 but which may extend up to 1 lakh. Have we written this on the left hand side? Yes. Then after that, the auditor of the company has not complied with the provisions of section 139, 144, 145. Then punishable with fine which shall not be less than 25,000, which may extend up to 5 lakh or 4 times the remuneration of the auditor, whichever is less. And if the auditor, what? Knowingly or willfully, with the intention to deceive. Deceive means to cheat. With the intention to deceive. To whom? Deceive the company, the shareholders, the creditors or the tax authorities. Right? So with the intention to cheat. Cheat who? The company, the shareholders, the creditors or the tax authorities. He shall be punishable with imprisonment for a term which may extend up to 1 year, and with fine which shall not be less than 50,000, which may extend up to 25 lakh or 8 times the remuneration of the auditor, whichever is less. And when an auditor has been convicted under subsection 2, what is subsection 2? Knowingly or willfully. Right? Knowingly or willfully. Then what does it say? Refund the remuneration received by him to the company and pay for the damages to who all? Company, statutory bodies or authorities, or to the members or to the creditors of the company for loss arising out of the incorrect or misleading statement of the particulars made in the audit report. Right? So is the auditor required to pay for the damages? If he knowingly, willfully contravenes the provisions of these sections, is he required to pay for the damages? Yes. And it says the central government will give the responsibility to any statutory body or authority for ensuring the prompt payment of the damages to the company persons or so. Right? So central government will appoint certain persons to be behind the life of the auditor, to do the prompt payment of the damages. And what does it say? For civil liability, who is going to be liable? The audit firm will be jointly and severally liable. However, for criminal liability, who is going to be liable? Only the concerned partner is going to be liable. Right? For criminal liability, who is going to be liable? Only the concerned partner is going to be liable. Okay. Right. So that is regarding the section 147, right? So far have we completed all of this? Yes. And now coming to the last section over there, which is regarding the cost audit, right? So what I have discussed right now is section 147, which is regarding the punishment for the contravention by the company, by the officer, by the auditor, unknowingly, by the auditor, knowingly. Are you understanding? By the company, how much it is? 25,000 to 5 lakh. Officer of the company, 10,000 to 1 lakh. Then auditor of the company, 25,000 to 5 lakh, or 4 times the remuneration of the auditor, whichever is less. Then if the auditor knowingly, willfully, then 50,000, which may extend up to 25 lakh, 8 times the remuneration of the auditor, whichever is less, and imprisonment up to 1 year. And then also pay for the damages and refund the remuneration. Right? Pay for the damages and refund the remuneration. Are you understanding that? Right. This is section 147, which is regarding the punishment for the non-compliance. Okay. The matter will go to the court of law, then NFRA will be behind the life of the auditor and it would be proved. He'll look into the working papers of the auditor and all. They'll have meetings, they will call for the personal presence of the auditor, they will interrogate the auditor, summon him. Huh? No, he was not aware of the law. So you have to prove your ignorance. So exactly, no, that is what. So mainly, but there is a possibility that the auditor was not aware, or it was just he filed it later or something, like appointment of the auditor or something. Right, so there it says, like if it's just a negligence which is on the part of the auditor, then 25,000 to 5 lakh rupee, or 4 times the remuneration. But if knowingly, because ideally auditor should be knowing the law, and knowingly if he is not complied, then it says the higher amount of the fine. Right? Then the higher amount of the fine. Okay. But you prove it that it is unintentional. But the party which is convicting you, even they need to agree that it is unintentional. The matter will go in the court of law, right? So how many pages written in your book so far? 100? Seriously? 100 पेज लिख के हो गया? 30? 10? 50? Half century? 60 pages? 25. So you are, they say knowledge is power. So all of you are powerful people now, no? You know the provisions of the company law. Right. So anyways, now let us come to section 148, which is regarding the cost audit. Right. Now let us come to section 148, which is regarding the cost audit. Okay. So now, is every company required to maintain the books of account? I think yes. Every company, is it required to maintain the books of account? Yes. But every company, do they need to include the cost records in their books of account? No. The central government will prescribe the companies which have to maintain the cost records as a part of their books of account. Then every company which is maintaining the cost records as prescribed by the central government, does each one of them have to get a cost audit done? No. We have the applicability of the cost audit and also the exemption from the cost audit. So say example, I am saying there are 1,000 companies. Example. So all 1,000 companies, do they need to maintain books of account? Yes. Out of that, say there might be 300 companies which also need to include the cost records in their books of account. And out of that, there might be the 100 companies which also need to get the cost audit done. So every company need not maintain cost records. Then every company which maintains cost records may not have to get a cost audit done. You understand? Every company which maintains the cost records need not get the cost audit done. Okay, right. So now, yes, cost records. What do you mean by the term cost records? It means the records which give the unit cost of the production, the sales, the margin of a product on a monthly, quarterly, right? Monthly, quarterly, half yearly, or on an annual basis. Monthly, quarterly, half yearly, or on an annual basis, right? So material, labor, other items of cost, then total number of units manufactured and divided by the total number of units manufactured, and that will give you the unit cost of the production. So what you come to know from the cost records of the company, the unit cost of production, sales margin of a product on a monthly, quarterly, monthly 12 times in a year, quarterly 4 times in a year, half yearly 2 times in a year, and annually once in a year. Right, so monthly, quarterly, half yearly, or on the annual basis. Okay, right. Then what does it say? If the company needs to maintain the cost records, if their overall annual turnover, yes, this is again a correct incorrect question over there. If their overall annual turnover is 35 crore or more, right, then they need to maintain the cost records. Right, so central government will prescribe which companies need to maintain the cost records. But out of that also, that company needs to maintain the cost records if their turnover is more than or equal to 35 crore. Now what does it say? These companies, it includes the foreign companies, even they need to maintain the cost records. But which companies don't need to maintain the cost records? The micro and the small enterprises, right? The micro and the small enterprises under the MSMED Act. You know the MSMED law, right? The Micro, Small, Medium Enterprises Development Act 2006. Right, so the micro and small enterprises, they don't need to include the cost records in their books of account. Foreign companies, do they need to maintain the cost records? Yes. But what does it say? Micro, small enterprises, no need to include the cost records in your books of account. And when does a company need to maintain their cost records? One, if CG prescribes and their turnover is 35 crore or above, then they need to include the cost records in their books of account. So what is the important figure over there? 35 crore. Right, then what does it say? 35 crore, that means they have to maintain the cost records which give the unit cost of production, sale, margin of a product on a monthly, quarterly, half yearly, or on annual basis. Now, every company which is maintaining the cost records, is every company required to get the cost audit done? Every company which maintains the cost records, is each one of them required to get a cost audit done? No, we have the applicability of the cost audit, and we also have the exemption from the cost audit. We have the applicability of the cost audit, and then we also have the exemption from the cost audit. Right, so what is the applicability of the cost audit? It says, one, you might be a company which is under the regulated sectors, or you might be a company under the non-regulated sectors. Like say if you are a oil company or you are a telecom company, then you come under the regulated sectors. Who has determined what is regulated, non-regulated? Central government. Central government has given the list that if you are doing these, that is not in our syllabus, but it says if you are into these lines of business, you are a regulated sector. If you are, say, manufacturing paper, you are manufacturing cement, you are manufacturing rubber, tea, coffee, then you come under the non-regulated sector. So you have the regulated and the non-regulated sectors. Okay. Now, if you are under the regulated or non-regulated sectors, you have to check the overall annual turnover. You have to check the overall annual turnover and the individual product service turnover. You have to check the overall annual turnover and the individual product service turnover. What does it say? For regulated sectors, if the overall turnover is more than or equal to 50 crore and the individual product service turnover is more than or equal to 25 crore. And for the non-regulated sectors, if the overall turnover is more than or equal to 100 crore and the individual product service turnover is more than or equal to 35 crore. Right, if the individual product service turnover is more than or equal to 35 crore, then you need to get a cost audit done. Like, say, what does it mean over here? Right, say you are in the non-regulated sectors and you are manufacturing tea also, coffee also, and the rubber also. Example, paper, whichever. Right, so now you are manufacturing 3 products or services, right? So 3 products over there, right? So from each of the product, right? Say your total turnover from the total of these 3 products is coming to 120 crore. Right? So overall annual turnover is more than or equal to 100 crore. And individual product service turnover, say, is 40 crore and the 40 crore. Right? Then tea also, coffee also, rubber also. All 3 you need to get the cost audit done. Will this company be maintaining 1 set of cost records or will they be maintaining 3 set of cost records? They will be maintaining 3 set because material, labor, other items of cost for each one of them will be different. You understand? No, for each one of them it is going to be different. So now in this case, the overall product service turnover is more than or equal to 100 crore and the individual product service turnover is also more than or equal to 35 crore. So all the 3, the cost audit will require to be done. But say in case if their tea turnover is 50 crore, coffee turnover is 50 crore and rubber turnover is only 20 crore. That's the breakup of the 120 crore. Then what does it say? Overall turnover is exceeding the 100 crore and individual product service turnover for tea and coffee, it is exceeding the 35 crore. So only for tea and coffee records you need to get the cost audit done. No need to get it for the, the rubber. Are you understanding that? Right, say no need to get it done for the rubber. Right, say the company is manufacturing. Right, say the company is manufacturing tea, coffee, rubber, sugar, right, paper. Example, tea, coffee, sugar, paper, right, and say they are also manufacturing, say, some particular jute. Example. Okay, so now what is their each turnover is 20 crore. Right, so how much is the overall annual turnover? 120 crore. But each of the individual product service turnover is only 20 crore. Example, right, each individual product, tea 20 crore, coffee 20 crore, rubber 20 crore. So is overall turnover exceeding 100 crore? Yes. But is individual product service turnover exceeding 35 crore? No. So do they need to get any cost audit done? No. Do they need to get any cost audit done? No. Why? Because any of the individual product service turnover is not exceeding the 35 crore. Right, say if the company is only manufacturing tea. Say if the company is only manufacturing the tea and their revenue from tea is only 1000 crore. So overall turnover is going to be equal to individual product service turnover. Then do they have to get the cost audit done? Yes. Are you able to understand this, everyone? Okay, right, so that is the applicability of the cost audit. And then you have the exemption from the cost audit, which is again a 5-star, important discussion. What is the exemption from the cost audit? Okay, though you are maintaining the cost records, no need for you to get a cost audit done if you are operating in an SEZ, special economic zone. It says holiday. No need for you to get the cost audit done. Do you need to maintain cost records? Yes, but no need to get a cost audit done. Or more than 75% of your revenue is coming from the exports, and that too it is coming in the foreign exchange. More than the 75% of the revenue of the company is coming from the exports, and that too it is coming in the foreign exchange, US dollar or so. Right, so say there is a company having a turnover of, say there is a company having a turnover of 1,000 crores. 700 crore of their revenue is coming from the exports in the foreign exchange. Do they need to maintain cost records? Do they need to maintain cost records? Yes. Do they need to get a cost audit done? 1,000 crore revenue. 700 crore is coming from exports in foreign exchange. Do they need to maintain cost records? Yes. Do they need to get a cost audit done? Yes. Why? Because it is only 70% which is coming from the exports. Right? If the same question I change it to 800 crore, then do they need to maintain cost records? Then do they need to maintain cost records? Yes. But do they need to get a cost audit done? No. Then last one, or yes, the exemption from cost audit, or they are engaged in the generation of the electricity. Right? They are generating electricity. They have put the windmills everywhere or the solar panels everywhere. Right? So engaged in the generation of the electricity. And this electricity, are they selling it? No. This electricity is used for the captive consumption, right? So in-house, right? In-house it is being used, and for that they have the captive generating plant, right? So engaged in the generation of electricity for captive consumption through a captive generating plant. Again, what does it say? Do they need to maintain cost records? Do they need to maintain cost records? Yes, but they don't need to get a cost audit done. They have the exemption from the cost audit. When are you exempted from getting a cost audit done? A company operating in an SEZ. So say there is a question, Mithas Limited is a company, right, which is engaged in the manufacturing of sugar, and it is operating in the SEZ, and it is having a revenue of 1,000 crore, has not appointed the cost auditor. Comment. Mithas Limited, a company engaged in the manufacturing of sugar, operating in an SEZ, having a turnover of 1,000 crore, have not appointed the cost auditor. Are they required to appoint a cost auditor? No. Why? Because they are operating in an SEZ. Do they need to get a cost audit done? No. They don't need to get a cost audit done. Are you understanding that? Right? So operating in an SEZ, finish. No cost audit required. Right. Then, or yes, is revenue from exports. More than 75% of their revenue is coming from the exports, and that too in the foreign exchange. Or they are engaged in the generation of electricity for captive consumption through a captive generating plant, right? So that's the applicability and the exemption from the cost audit, right? We take a break and then we complete with our discussion of the cost audit, and then also start with the chapter of the CARO 2020. Okay.